It's March 16th, 11:21 p.m. Getting ready to go into the London session. This is a tape reading of, you guessed it, London session. We're just watching how the market moves. I'm in this current long position. Personally, I would have probably ran a little bit higher contract sizing, but we're only going for $500 gains. That's all we need. It's peaks money right there. I'm making this video to give you a little bit of insight, show you a little bit of what a normal trader would have taken here, a normal setup, I guess you can say, quote unquote normal, and what I do to, I guess you could say, outstand the normal. So, excuse me, really quickly, we're gonna go over what I saw today. Monday was just terrible price action. There's no reason to be in the markets. I'm gonna show you something really quickly. Off of that, we go to this one right here, and I need to add this new market. It's going to be, move the watch list. We want the new contract. So we're still in March, right? But we're transferring over to June. We need June now. So that's the clean one. I told you, mark out Thursday's first presenter for Valley Gap. I told you, mark this out. I mean, I don't know how much more beautiful you need this to be. Off of this right here, this alone, after seeing this wick, which if you would have saw it real time, you would have seen that this candle went up. And to see it all drop in one fell swoop, in one quick second, you would have noticed, hey, this is, this right here is respecting this Thursday first presented for Valley Gap PD array that you know, my amazing, handsome, tall, kind, white mentor was teaching me. And if you would have saw this, you would have saw, hey, we didn't close above 50% constant encouragement. Okay, enter right off of there. Okay, the entry would have been right here. Let's go ahead and mark it out. And the thing with this is, after you see it respect 50% constant encouragement by not closing out, your stop loss would have been that 50% constant encouragement. That's now your new stop loss, 50% constant encouragement. Then now you got to look for your target. Obviously, we're gonna go over to the 15-minute time frame, and I'm going to go ahead and remove stuff that is no longer important. We still have liquidity up here, plus we still have another for Valley Gap up there, but I think that we definitely need to see some progression lower, I guess you could say. Let's just remove it all, I guess. Remove that. Keep that on there. I can stay there. This for Valley Gap has to go. And then this right here that I just marked out has to go. And now, this is Friday's first presenter for Valley Gap. We can see how we were respecting, we didn't close below it. This sent it up higher, and then this is why we were accumulating, because we were between Thursday's first presenter for Valley Gap, Fridays. You can see how we were coming up and down, up and down. Eventually, it booked it fully booked Thursdays, and after we see it book Thursdays, take out all this liquidity, you can see all this movement down, and that's when it actually decided to go lower. Right now, we just kind of went down. I saw this, and I was going to take the trade from here, but sadly, I wasn't home, so I couldn't manage that position if I wanted to, so I decided not to take that trade. But this was a beautiful setup off of the lower half of the Friday's PD first presented for Valley Gap, and we'll go ahead and mark that out. So Friday's first presented dot for Valley Gap. We can remove this order block here, and then today's first presented for Valley Gap is right here. We can mark that out as well. Mondays first presented dot value. Oops, I was holding down that there. So really clear 2020 vision. You would have saw it 100%. Now there's liquidity down at this low because this low never got traded down at this low. This low never got traded out by this low. So that creates really extreme liquidity here. Liquidity that just so happens to be Asia's lows. So now what I believe is, because we have 9:30 p.m. here, we have London session take out Asia's low, and now we come down. And just how beautiful is that? That it respected the first presented for value up. You could have entered right here, stop loss at the 50% consequent encouragement, and it would have been a perfect entry. Just beautiful leg down into these lows. But I personally would have waited until those lows. I would have exited a little earlier, and I'll show you why. So after seeing all that, go over to the 1 minute time frame. Okay, remember this is your trade entry, preferably trade entry. Okay, remove that magnet real quick. And let me show you what I would have taken it to. Let me remove all this stuff. Anyways, go over to regular trading hours, and we mark out the, you guessed it, opening range gap. So now I want the magnet. We mark it out right here. We mark it out up here. Okay, beautiful. From here now, what we want to see is, we want to see from 9:30's candle, or I'm sorry, from this rejection candle. And yes, you would have been here waiting for a long time, but it's gonna pay. It will pay out. And that's what you want. Look for that 50% consequent encouragement. Like I said, I would have probably closed out right here, called it good. That's enough for me. That's more than enough for me. I honestly, personally, would have probably closed out a little bit sooner, where I probably would have shaved off most of my position here at the 1 to 11 risk reward off of 25%, and then obviously go down lower. So again, using my average, let's say 5 contracts, would have booked a quick $20,000, and then obviously 50% consequent encouragement, adding an extra 7,000. And if you're a crazy man, then you wait for those lows, and then now you book a quick 30,000 or whatever. Again, I'm not greedy like that, so I'm fine. Anyways, with this first presented for value gap being opened, I'm going to show you my new 2026 model. And I'm going to show it to you guys off of one trade here. This video is getting to get a little long, but that's okay. Longer videos are the ones that are better. But go to this one because this is the correct chart. You see how it wasn't trading into 25%. It was like a magnet was there until we can see this accumulation starts coming down to, you see how this range, it stops going. So the difference between range and accumulation is this. This right here is a range. A range is points to points. So this right here is points to points. Accumulation is this straight ping pong action. And when you see accumulation, that's when you know that a move that's going to take it out of that range is going to happen. So then, really simply, we see this. I open the trade, and I see this. I see this fair value gap, and I see it ranging into this fair value gap. I know this fair value gap here must stay unmitigated. So that's it. That's the perfect entry. Using the high of that fair value gap, stop loss at the previous at these lows, closing below these lows. We no longer want to see a trade into that. And a quick 126 risk to reward, 127 almost risk to reward to that 25% target. Smacked it instantly. Not instantly, obviously, but you know, You could have waited until right here, and you would have still been able to catch good points. When it would have still been safe using constant encouragement of that for value. Same thing over here. Yeah. Personally, I wouldn't like to see these highs stay untouched or unfilled. I would love to see this trade back up into here. That's obviously sleep. It's living in a dream world. Anyways, my new 2026 model is that simple. It's using a fair value gap and continuation. Fair value gap, continuation, and a strong draw. And I'll show you what strong draw is here. Throughout this entire term, we see market create a fair value gap, trade back into that fair value gap, and it just disappears. Gives up the ghost. No return. Fair value gap, gives up the ghost, no return. Down. Fair value gap, gives up the ghost, first one, down. You see all this. And then you see it right here as well. Fair value gap, gives up the ghost, down. And so this is where a lot of people would have taken a short, but I instead took this long position to the upside. Really simple. Let me mark it out. Right here we see this fair value gap get created. Let me mark that out for you. We see this return into here. We don't see it past the top half of this, so it's staying in this fair value gap. After staying in this fair value gap, we see an other return. That's our issue, the other return. And that sure gave us a leg down, but that's the reason why we didn't hit the 50% constant encouragement, because this here is a super high resistance area of liquidity. Why? So many traders are trading down into this level, and that's the reason why it didn't give it to us. So instead, what do we need to look for? What are we seeing? What are we genuinely trying to notice? Okay. We'll see that no squared ends were created, like right here. None were created. And then the ones that were came back and got filled. This market is currently ready to go higher. Using this BPR right here, most likely we'll try to trade it, track higher. I'm not interested in this because, again, where are we? We're at this 50% constant encouragement where I genuinely would want to have liked to see it trade to. So that's why these trades right here got smoked by this move higher, because so many people have their shorts right here thinking that if they just held on a little longer they can get this trade. Just idiotic. It's gambling at that point. So once I saw this huge leg up, this BC, that's what it's called, the buy side imbalance, sell side inefficiency, meaning it's a huge buy side imbalance, a huge buying fair value gap, and there's no sell side, because you'll see how right here we terminated that sell side, and when we terminated that sell side, we didn't even bother to trade back into that 50% constant encouragement or the opening range gap. So using that as my entry, using this as a fair value gap over here, not respecting 50% constant encouragement. Again, same thing, respecting 50% constant encouragement. You can see me trade up into, and you'll see where I closed it out right here. Literally where I closed it out, right about there, risking $100 to make $550. It's such a cookie cutter setup. How much candles does that take? Let's give it. Let's not count this one. 1, 2, 3, 4, 5, 6. 6 candles. 6 candles is all it took for us to just smack that instantly. Just 6 minutes. 6 minutes of my day instead of waiting 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. 22 minutes just to get smoked. So, again, 2026 model is really simple. Strong PD array, a target, and a strong fair value gap rejection continuation. That's it. That's my new 2026 model. that's 15 minutes on the timer. I'm gonna call it a night now. I hope this was insightful. Hope it helps, and take care.